The last thing we want is for a company to have very high dividends only to be of poor quality. For example, if a company pays out 7% in dividends, we may think it's good, but if the stock price is also going to fall, then what's the point of those 7% dividends, right?
Cha-ching!
What's up everyone, welcome back to another video with the Millennial Finance. Recently, the markets have been really choppy with no clear direction. Lots of stocks are actually taking a beating with a lot of negative headlines and news like new variants, high inflation, and resultingly, potentially higher interest rates in the near future. Dividend investors always make it a point to say that they invest in dividend stocks because in times like these, even though all stocks may be going down, at least the companies will still pay out dividends and this dividend yield will help them recover some of the losses. Now, technically that's right. So today, we'll be talking about 4 high dividend companies going into 2022. But it won't be as straightforward as just Googling the highest dividend yield stocks because that doesn't really work. If I was just an investor who wanted to know which stocks have the highest dividend yields and wanted to invest in it, then the list would look a bit like this. These companies are apparently paying dividends of over 12% and even up to 25%, and obviously, hopefully I don't have to tell you guys this, but this is not sustainable. Both Topglove and Hartalega had special dividends that happened in the last year, and this is unlikely to repeat itself in the coming year. On the other hand, Serba stock took a massive hit which increased their dividend yield. Now, the dividend yield can be higher by 2 ways. The first one is that the companies pay more dividends, which is what we want. And the second way is that if the stock price goes down, which is not really what we want. Technically, Serba could maintain their dividends going into next year, assuming that their business has no changes, but I don't want to go too deep into Serba dynamic because of the issues that they've had recently. Now, what I will do is share a list of high quality companies with solid dividends. The last thing we want is for a company to have very high dividends only to be of poor quality. For example, if a company pays out 7% in dividends, we may think it's good, but if the stock price is also going to fall, then what's the point of those 7% dividends, right? Anyway, let's get started with the first company on this list, and it has to be Maybank. Still the largest company in Malaysia, Maybank has delivered solid revenue and profit numbers over the last few years. In doing so, of course, they've also managed to pay good and steady dividends over this time period, and I don't see this being a risk moving forward. Due to stock price pressures, meaning Maybank stock hasn't really gone anywhere or in fact has been going down over the last few years, their dividend yield currently stands at an incredible 8%. Usually when companies pay this high of a dividend, it does make me think twice about why that is the case, but in the scenario of Maybank, it is just a very good company, well run, and it's just that their share price isn't getting any love. I don't expect this dividend yield of over 8% to decrease significantly in 2022 unless the stock price really starts to move up. If the stock price goes up, the dividend yield will go down, but in that scenario as an investor, we don't really care, right? They should also start seeing more opportunities within the regions that they operate in as the countries in Southeast Asia start to reopen more of their borders. However, they, like most of the companies on this list, will be impacted by Cukai Makmur in 2022 or prosperity tax, which could see a slight dent in profits. From a consumer standpoint as well, Maybank is definitely one of my favorite banks in Malaysia. I use a lot of their products, and they've also launched very new or very digitally savvy products like QR Pay and May. In my opinion, they are the only bank in Malaysia who has successfully done this, with this fintech industry being dominated by non-banks. So yeah, this is actually one of the rare scenarios where we have a good and solid company. They're actually large cap. We don't see any future headwinds, and they actually pay a very good dividend. Before I go on to the next stock, if you want to trade Malaysian stocks and you want to own these companies, then sign up for Rakuten, use our link down in the description below, and you will get 500 Rakuten points when you register. Next up, we have Petronas Gas. With a market cap of 36 billion ringgit, they're also one of the constituents of the FPM KLCI. Now I know this isn't anything crazy, looking at Maybank with such high dividends, it's nothing like that, but considering they're also another very solid company with good growth prospects, it is a pretty enticing investment. The dividend health of this stock is also pretty stable, which means that we should see the dividends at least being stable or even increasing in the next year. Their current dividend payout, which is the amount of dividends they pay out as a percentage of net profits, is only at 72% for 2021, which means that they have a lot more wiggle room to increase their dividends if they want to. In terms of financials, it has been a topsy-turvy year for Petronas gas this year compared to 2020, but when you zoom out and look at the bigger picture over 5 years, then you can see that they've actually managed to grow both revenues and profits in a stable trajectory. Another positive for them is that they are in that basket of stocks that could potentially benefit from inflation. Providing core services, it is unlikely that we will see a drop in demand due to higher prices moving forward, which places this company in a very good position going into next year. In number 3, we have British America Tobacco or BAT with a portfolio of reputable brands like Dunhill. Now I recognize that this isn't really a stock for everyone, some people wouldn't want to buy it, including myself. However, strong performance this year and a very good dividend means that I just couldn't exclude this company from this list. So yeah, I'm just going to share the information, it's completely up to you guys what you want to do with it. It currently has a dividend yield that can rival Maybank at 7.1%. In 2021, the company has managed to grow net profits by around 20% each quarter so far this year. Net profit margins have also significantly increased in 2021. Looking back last year, it was hovering around the 10% mark. This year, it's at 12% and even nearly 13% in Q3 2021. This is a sign of better efficiency, especially when companies are this big. Maybe they can't grow revenues as fast, but what they can do is be more efficient with their costs, which translates to more profits and probably more dividends. The company is still a shadow of its former self though, with the share prices dropping nearly 70% in the last 5 years. But it seems to have found its bottom in 2020 in both share price and financials, which have been on an upward trajectory. No certainty in that, of course. It could still go lower. Just because it dropped 70% in the last 5 years doesn't mean it can't go lower. It can, but it is showing good signs of life. They're also going to offer alternative, less risky products to the market, which could see higher adoption when we see tighter government regulation. For example, once the vape market is regulated in Malaysia, BAT has confirmed that they will enter this space. And it all seems to be moving in that direction, with the government imposing an excise duty on vapes and e-liquids in budget 2022. So this could be a potentially big market for BAT once everything clears up, because as we all know, many Malaysians actually vape, and this could be a good source of both revenue and profits in the future. On that note, the impact of illicit cigarettes in the market is also starting to fall due to tighter government restrictions. I know that this stock isn't for everyone, but their financials, their dividends, they seem to be trending in the right direction after a brutal half decade for the company. Now going on to our final pick, and this one was a bit of a tough choice. We knew we wanted to choose a REIT, but there are just so many good REITs out there. At the end of the day, I decided to share one with very high dividends and also pretty good fundamentals, which is Sentral REIT. They currently have a dividend yield of over 8%, which is probably one of the highest in the industry groups. In terms of the portfolio, they focus on commercial property, which includes office space. True to the name, most of their assets are in KL, and more specifically KL Sentral, and the majority of it is within the Klang Valley itself. However, they do also have exposure to Cyberjaya and Penang. They lease their spaces to relatively stable companies like DHL, HSBC, BMW, and Shell. Their occupancy rate is also pretty high at 93% as of the last quarter, which improvements to be had in a few of them. However, the core focus for Sentral REIT right now is probably on two things, being cost efficiencies and tenant retention. They seem to be doing very well with cost efficiencies, and we can see this by looking at their net profits, which has grown despite lower revenue. If you have lower revenue and still higher profits, it can only mean one thing, is that you have lower costs, which means more efficiency in the way they work. However, they would still need to ensure high occupancy rates to drive revenue growth, because cost efficiencies can only bring you so far. Out of all of the companies on this list, this one probably has the least potential for capital appreciation, meaning the stock price going up, but because of their very high dividend yields and because of them being a REIT, I consider this one of the better investments if you want a high dividend portfolio. If you want to invest in any of these stocks that I mentioned in this video, then again, sign up for Rakuten. You can get 500 points. We'll leave the link in the description below, and it really supports the channel as well, so we appreciate it. Remember, these are all just suggestions that I provided. I just give you guys the information. You guys should take it on, do more research before you spend your hard-earned money. Thanks for watching this video to the end, guys. Give us a big thumbs up and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.